All right, so welcome back. What's going on in markets? Let's share a screen and discuss. Let's just run through them. Let's start with NASDAQ because we got a position on in NASDAQ. Hanging by a thread here. But we got the short in NASDAQ right here. Why do we take the short? Yearly, just nothing going on there. Quarterly, kind of bearish from the failure to stay above initially, at least on the session, that kind of destination and whatnot. It's not super bearish, not something we're leaning very heavily on. Monthly is bullish, but extended, right? And then weekly, of course, is kind of the bigger theme that we were talking about today. And, initially trying some shorts early here from the CVA breakout pullback. Well, guess what? If that doesn't work, maybe we get up here and start to fail and whatnot and aren't able to break out to the upside, right? Which we're flirting with, right? It's a little, dicey, but certainly not dicey in terms of the narrative on the weekly. So, we were looking for potential long opportunities, right? And it just kept going and going and going and going. And then it breaks down and then boom, right? What does the order flow look like as we make these highs? Not exciting. Buyers kind of really faltering. Sellers start to take control. Let's fade it. So that's what I did. Got scaled out into VWAP. And by the way, I called these out in the chat while we were off stream there. It came back up, went to VWAP again, came back up, and now it's kind of flirting with doing more. So we'll see what the core position can do. Already got a really good scale, so no big deal. Either way. Buyer's not really threatening, at this point. So we'll let it hang in there. S&P, similar situation. I forgot to do the DMI again today. It's all right. You guys are more important as usual, like I said. Extended, but bullish and balanced up. A couple levels that we could potentially pull back to. Weekly is sloppy, isn't it? It's we were coming into the open, we go, bearish, right? The fact that the weekly is breaking down. And what have we done, during the session today? Kind of above it and then break down, but now it's up here. So we're remaining bearish. The level now, I guess I can move it. I don't know. I'm going to keep it the same just for review purposes. But let's put a pink one or something up there. Right? We continue to be bearish. The S&P. S&P not as clean. Let's go back to the NASDAQ. Right? That's a very nice move all the way to weekly VWAP and a nice move all the way back up to short. Okay. So that's why I'm expressing that there as opposed to the S&P. S&P is fine. It's just that, again, as kind of we've talked about a little bit, not as much to lean on with some of these trades I've taken today. They're kind of single variable trades that don't, the other time frames don't say, you're an idiot, that's a terrible idea, but they're not giving us quality lines in the sand to really lean on in a confluent sense of things. What do we think about crude right now? Crude's been very interesting today. While we were on the call, we were exiting our position into this area, and then it kept going for a while. Order flow got really, really spicy, let's call it. And then we reversed in terms of order flow. We got all the way down to the next CVA level and now have popped back into this area. So really, there's a couple different things we could talk about that's happened from a structural perspective, or that's happening. We're going to bring this to hard right edge, right? This is an afternoon session where we're talking about what's going on in markets. We're not just recapping. We went down, guys, and then we went up. Be careful of people on Twitter who constantly just narrate what has happened. Be very, very careful of those people. They sound smart. They're not delivering anything to you. So we got this main distribution. We were interested in kind of this little guy up here as well, right? We broke it down. We went, the expectation was to kind of get to here. I kind of exited my position, I think, more closer to this point of control. Well, guess what? It kept going all the way here. Now we've reverted back in, right? So this is really, really important. This is where we are. This has been a reversion. We attempted to break out over, a couple of days. We tried a few times, including today, and now we've simply reverted back into here. That's the main picture right there. Crude is volatile, but not trending, right? We can be volatile and trending. We could be volatile and not trending, which is what we are. We could be trending and not volatile. Think of like S&P grind up mode in the summertime. Different market states that there could be. So that's where crude's at. What about other factors? Well, we are setting up here for one of our potential hypos. Let's pull up that hypo sheet. Let's pull up our prep. One, weekly imbalance pullback long, right? Which is what we tried to get into this morning. Two, short scalp after failed weekly imbalance pullback, and then a breakout pullback lower of the upper balance area, this upper gray area. Scalp, it's a scalp into hypo 3 area. That's the short trade that we got in crude oil. And now what's setting up is hypo 3, the monthly imbalance. I'm sorry. Hypo 3 has been broken down, right? That was the bull zone that we got into. We exited our short and we said, okay, we could begin stalking long if it sets up. NASDAQ back in our favor here. We blew through that. We're lower than that. So what is the following hypos? Return pullback of the composite value high, right? That would be a short from here, but we didn't really like that because of where we were on the weekly and where we were on the monthly. We would have had to have pushed much, much lower in those, and then maybe that could be something that's on the table. But what's really on the table is the breakout pullback, not currently. In fact, I would say a hybrid of 4 and 5. One of the CVA levels could give us something, but really we're focused on the monthly, failed to stay imbalanced up. It's not clearly accepted that yet now, is it? Right? We're being micro in that read of the monthly being failed imbalanced. Weekly getting imbalanced down. Is the weekly getting imbalanced down? I think so. Look at all these bars. This is a decent up rotation from these lows on the weekly, top center. And we're seeing some sellers respond from weekly developing value area low. So it's not picture perfect, right? But based on this volatility, we could be looser with our view of precise CVA levels. I always talk about that. As volatility expands, the levels instead of composite value high and low become just a level, right? We could be looser with that view. The monthly, no matter how you slice and dice it, if we're calling this a failed imbalance, we're being very micro, because we would have called it that yesterday during this condition. We would have called it that here. We would have called it here. We would have called it briefly here. And it's not, right? Monthly is still imbalanced up. We haven't gotten halfway to VWAP. We haven't put in a bunch of time below here. So it's a micro view. So we have to keep that in mind and be less aggressive with what we do in order to potentially trade the potential imbalance pullback, right? On the weekly. So that's something we always like to talk about. Hard right edge, what's going on here in the afternoon, what might set up. That's a potential short setup, and just look at the DMI, right? Look at what we had. We had a bull zone. We got below it. Now we're retracing back up to it. It's 1, 2, 3 different levels, one of which we're being micro with, right? So the key lines in the sand for that bull narrative, hypo 3, have broken down, in a large way. So this is a good risk reward short location. You just have to, I'm being a little more nuanced with you, a little more detailed as I walk through what does that really look like. And then NASDAQ is a trade that I like. We're +2, we're plus 1.5 on the year. We're beyond +2 for the quarter. We are at the +2 for the month. And it's an extreme fade of a freshly rotational week. This is the very beginnings. Remember how we talked about a couple days ago, how we do top-down analysis, but moves begin from the bottom up, right? Intraday RTH goes rotational as the weekly was going rotational, which is before the monthly even has a full pullback to its imbalance. And then that might break down, which might cause the quarterly to start breaking, that things happen on shorter time frames before they happen on longer. But the analysis and where we get our narrative read from needs to be top down. It's very important. So what we have to be careful for here in this NASDAQ trade is the ETH, right? The ETH is, I'm going to call it technically imbalanced up, right? So we're going to need to see that break down. And guess what else? I'm watching Delta Neutral, which is firing off right here. Let's see the sellers contextually take control of this market. The other problem is that CVA level, right? We're also starting to, on a very short-term basis, hold above it. When I took the trade, we had broken it down and we're starting to hold, actually I think I took the trade a little earlier over here, but anyways, we did, once I got into the trade, we broke it down. So what would be picture perfect, once I got into that position? Well, picture perfect would be, boom, break this down, retest this, come up here, put in, which I thought happened right here, by the way. Right? That's what would be picture perfect. But no, now that's why I'm saying caution. There are some things that are working against this trade. So that's the hard right edge and where we're at. One more thing I wanted to say. I know I hope you guys know that I was joking. That's why I put the little smiley face. From the brink of DLL, back in the green overall on the day. I'm just keeping you guys, because of what I'm doing this week, showing you my trading, showing you not dollar numbers, not size, not stuff like that, but I'm keeping you updated with my P&L. The P&L is not my focus. It's not what I'm trying to accomplish. I'm trying to trade well. I'm trying to make good decisions. So let's keep those compartmentalized. You know, that's why you don't hear me talk about P&L. You don't hear me, tweet about, look, I made, whatever today. Okay, time for the Q&A. And that's my read on markets as of right now, including an update on a live position. I'll scroll up a little bit. We'll start with Luis. Luis is all over the place. Okay, we'll leave this here in case Merit sees it. Oof, what a day. Had to step out, didn't get the trade on NQ. Today, Rosie suggested merging all the CVA from past days, which would give a very good picture of the two balance areas. Yeah, that's, I thought about saying that. We can definitely do that. It doesn't hurt anything. So let's just merge everything. Well, I don't want that overnight session in there. So let's use, let's change our session times, get rid of the evening session. I don't know why I was agonizing so dramatically about that. Let's merge profile begin. Merge profile begin, merge profile end, and there you go. So upper distribution, lower distribution. Looks like my drawing is a little off compared to what this would tell me. I'd probably put it here and I don't know, maybe here, maybe there, right? It's all an approximation. I'm not worried about precision with levels. Levels are always areas, not lines. But if it helps you visualize it, it's a great thing to do. Would you agree with that instead of eye drawing it? Again, I think I answered this. It's half, what's that phrase? 6 one way, half dozen the other, right? If it helps you see it, do it. But it's, we're looking at distributions here. Yesterday, CL, you had some aggressive entries, even from pit session, which led to first stop outs. I know you talked about the inventory coming, but would you consider that risk reward picture could be unknown or at risk on inventory day, so therefore be less aggressive on inventory day for new students at least? No, I don't think so. It could be bad advice, but I think obviously the trade can be different on inventory days than non-inventory days. There can be more wait and see. The book might be thinner. I don't know if it is or not. There could be some differences, right? Anytime you're inserting a thermometer into the water, you're changing the temperature, right? So what a horrible analogy. I love that analogy, but for different things. I think the only thing you need to worry about is not holding or trading in and around the release, obviously. I think other than that, go for it. If you find that you're consistently losing money on Wednesdays in crude oil or whatever, then adjust. It's not a one size fits all. Good questions. Trevor, what a nasty stop run in crude. Indeed. Do you think talent in trading is real? Since we all start off as natural human traders, otherwise, wouldn't experience and doing the work be the only deciding factor? Or does talent have some factor in becoming a CPT? I think that talent is mostly overrated, right? I think someone who's extremely talented in, let's talk about short-term traders and what could be some talent. I think someone who comes from, let's say, a gaming background, not just I like to play games, but I'm good at video games. I'm good at them. There's some talent there or built up skill sets, which could be different, but we're going to call it talent in this case, something you're bringing to the table before starting trading, which we'll define as talent. you're going to be better at, let's say, quick reactions, speed with hotkeys, memorizing them, being able to, because it's a controller, you know, it's doing that with dexterity and a skill set around that. Can you learn that? Sure, but you're going to be like the gamer who first started out gaming before they learned some better dexterity and those mental pathways of quick reactions and developing that. Okay, so at the end of the day, it's skill, not really talent, right? It's nurture, not really nature, right? But different people are going to show up to trading with different skill sets that make them naturally better or worse, right? So I don't really, you know, we could get into cognitive abilities. I don't think that it's like, you know, obviously probably someone with Down syndrome is going to have a harder time, I guess. I don't know. Then, you know, I probably, right? Probably. I'll tell you this too. Really, really smart people have a harder time with trading sometimes than your more middle of the road IQ person, let's call it. Middle of the road IQ person, I can train them up. They can say, when you say jump, how high, and they can just go do it. As opposed to someone who's like, well, let me run some more spreadsheets and some, you know, analysis on this and that. And they kill themselves because of their smartness and trying to overthink things, right? That can hurt you in trading. So it's so difficult to say. It's a very interesting question. It's a very interesting topic of conversation over a beer. But at the end of the day, I think anyone who sits down and does what you're talking about, who puts in the work, who does the work and is in it for the right motivations and loves the work outside of clicking buy and sell and the rush of a trade, they're going to surpass anybody with any better prerequisites, let's call it. They're going to surpass them, no question. So that's really all that matters. But yeah, I think people might be a little bit better suited and have some better qualities. And a lot of that, though, doesn't come down to can you make it or not as a trader. A lot of that comes down to what's your niche? Where can you plug in and be successful? It very well may not be the type of trading you're seeing me doing. Nadro may work for you, but Nadro might work for long-term options traders, right? But short-term day trading may not work for some people who prefer, let's say, who are better at thinking slow rather than thinking fast, right? You got to be fast. To trade two markets as bad as I was trading them earlier today, losing as much as I was losing, you got to be able to think fast. Good question, though. Merritt, would you consider another condition shift as crude bounced off the lower composite value high and then entered the upper CVA? So I think I kind of answered that. On some time frames, yes. On other time frames, no, right? Structurally, crude has gone from breaking out below our most recent CVA to failing to do that. So it's now rotational as a current market condition relative to that, right? But we talked about weekly. We're seeing if we can go imbalance down. We've now traded a little higher, which makes that look a little different. So it's flirting with just staying rotational for the week, right? In which case, into the afternoon, we might get a long setup, right? As we go rotational, ETH, RTH, we might get a little pullback into lower extremes of weekly, of developing value, of composite structure, which could be a long setup for us, right? I forgot how to say his name properly. Joao, I think maybe it was. Okay, 3 questions from Joao. Before you took that last scalp short in crude, did you consider the VWAP on weekly could have been a threatening region, or no, you're just aware of it and would not be a factor to make you stand aside? No matter if it's VWAP, right? Let's draw. If it's a profile with a point of control, or if it's VWAP with the actual VWAP, I, as a rule, am almost exclusively focused on movement across, right? Movement across, or, movement away, right? From value edges. Okay, so that's the short answer. No, I don't really worry about VWAP or points of control as roadblocks to my trade ideas. I'm more so focused on completion of the full laws of market dynamics, the full moves across value. If with the benefit of hindsight, like a little bit of hindsight, wow, look, really swift rejection of VWAP, or wow, look, multiple rejections of VWAP, right? Then I start to pay more attention to it, start to factor it in, but not until it does it. I don't plan for it. In your latest NQ short, talking specifically about rhythm, I considered ETH DVA rhythm too micro on the 3-minute chart around the place you entered. I agree. And we weren't even rotational on ETH yet, were we? If I'm able to remember what happened 10 minutes ago. Correct. We were, in fact, you got a bullish region right here because this is an imbalance pullback from ETH. There's dissonance. So I'm bearish from here in just regard to DVAs. And we're bullish from there. So absolutely, there's only one, maybe consider 2 bars on the 3-minute of pullback. This was one of those instances where you see me get more aggressive. The market really opened up, right? Here's a really good lesson for you. Look at this trade versus this trade up until the point I entered, right? Section A versus section B. Section A looks like this. Section B looks like this. I said, you know what? There's delta divergence. We're at a bearish line in the sand with the finally getting the weekly full extreme fade up into this area. I'm going to take a shot here. Delta's moving nicely. Price starts moving nicely. I'm going to take a shot. I know the ETH is against me. I'll be very careful with this trade. I'm not going to go back to DLL territory trying to press for this. And I got the short and I got the scale. In fact, I got an add as well and another scale, and I'm still holding the core. So I hope that makes sense. It's a combination of a few factors that gave me the green light to be a little aggressive, but you're right about 3-minute rhythm. And that we weren't even rotational yet on ETH. In fact, that's why I've been saying, hey, this is scary. We're not staying rotational after trying to stay rotational on ETH. That's not a good look. That's not good for us for the short. Number 3, not really a question, but there's time during end of day review. Could you type next to your entries or talk through how many R's did you risk on each of them so we can see how aggressive you were based on overall context? I mean, for most entries, the dollar value may change slightly. So for example, if I say let's draw this out. Let's say I'm going to short, right? And I get short right here, but I don't like something about it, right? And you could go back, listen to the recordings. I'll be like, all right, I'm in a little bit here. I'm waiting to add the rest of my position, I'm just in for a little. And it stops me out. Well, that would have or could have been 1 R, but it only ended up being 0.3 R because I was only in for a third of the size I wanted to be in to get to full risk. I don't do that a whole lot, but you've seen me do it a time or two. So I don't know, it might take us a long time to go to each trade, go back, look at the size, look at, where we stopped and talk about R and whatnot. But maybe we'll figure out, like, I'll type it out in a different, off hours thing or something. But anytime that I was either risking 1R or starting to build into a position a little bit, or scratched rather than taking a 1R loss, right? I was willing to risk 1R, but made a discretionary decision at the hard right edge to scratch it prior to losing 1R, right? So there's different things that can happen, which causes it. My average loss is never 1R over any period of time. I'll tell you that, right? Because I scratch, I do little things where I'm in a little bit and then not quite full, and I do stuff like that, so it reduces my average loss compared to full stop size for me, full R value. Whenever I talk about my wins, though, like it's going to be relative to whatever I was in for and willing to risk at the time, So that's only fair that you take a look at, okay, what did you risk on this trade? What did you make on this trade, right? Not what was theoretically you should have risked on this trade, or whether it's too high or too low. Treat that, at face value. I'm long CL, knowing what you explained to me about the micro view and monthly development value high. We do not lose the bullish narrative. That's true, right? That's true. So if we look back at crude, what this person is saying is, look, I'm sticking with it. Like yesterday when we did this and you were saying, hey guys, the narrative hasn't changed. I agree with you. I agree with you. Now, getting kind of a candle close in here and starting to build some bars in here with their opens and closes, you know what I mean? Like that means we're spending time in here. That's a little different than an intra bar. In fact, it was like 1 3-minute bar off the open, wasn't it? Down and up, gone, right? Just off the open. That's a little different than when we start to mark time down here. So be careful with that. But I agree with you. Let's look at the rhythm. Let's we're rotating from here to here. The bulk of that rotation is still imbalanced, right? So we're going to maintain that view, technically speaking. That's why I'm very, very quick to point out that this is a micro read. If you're going to read that this is bearish now, that's micro. So be careful. Been very clear about that. Yes, TPO yesterday didn't have a poor high, but it was some kind of flat roof. I don't know what that is. How important is it? I'm guessing you're talking about what we call a weak high. Okay, flat roof. You're talking about what we call a ledge. Ledges are important until they're broken, right? Ledges are important until they're broken. Maybe I should rephrase that. So ledges are edges of balance areas. Okay. And if you're a student of mine, you know that we care about edges of balance area. Ledges are just more prominent edges. So we have a ledge here. What the overnight session, what did they accomplish? Right? They went and took out that ledge. The day session today, they also accomplished the same thing. There's a ledge is a lack of excess, right? It's a poor high or poor low feature that occurs inside the profile. We did have excess here, but then after that excess was created, we came in a bunch of periods and we didn't really create great excess. Only one little tick above there in F period. So it's technically a micro weak high, to coin a new term. But yes, good observation of a tangible feature of yesterday's profile. What's the delta doing in NQ? Ooh, it's really not scary, huh? Gonna let this thing come and stop us out if it needs to. Stops kind of, closer to high of day up here. They're certainly gunning for stops. There's certainly, the sellers are not taking control of NASDAQ. They're doing a bad job. But the buyers are not scaring me. They're about to say, we'll show you, scary. Okay. Please share how you arrived at the two CVAs around 4,500 and 4,520 in the ES. I don't have anything in the vicinity of 4,500. I'm guessing you mean this one CVA. Pretty sure we've done this live together. So it begins on 8:30 and then does not include whatever this, probably Labor Day 9/6. That's where it comes from. Question, do you find anything different in your mental state trading from a home office versus when you traded in New York? Anything you do to stay professional working from home? No, but like I have a risk manager still, right? So we have a risk team that monitors, our traders and whatnot. So I still have oversight, which I think is very important, right? If it was just like, well, I can roll the dice and gamble, and if I'm in a bad state or pissed off or do whatever, well, I can't really get away with that. So that's very important. Safeguards. Traders need safeguards, and I have those. So that's good because I'm a risk-seeking type person. Other than that, I mean, staying professional. I don't have to try that hard to keep it professional these days because I have graduated to the level of professional trading through all the pain and hard work. So I'm just kind of like, not that I've got it all figured out or that I'm perfect, but for the most part, day in and day out, I am, professional because that's where I am on the learning curve, So, no, other than doing the things that I teach, right? A good self prep, right? A good narrative prep, doing those things to day in and day out, doing the simple things well that allow someone to be a professional about their business. You know what I mean? Putting in the work. All right. Balance asked earlier this morning, I remember now, do you scale out in a linear manner? Let's say, 20% at every scale out. No. Let's talk about how I scale. So first of all, in the decision tree, it depends on whether this trade is, as you guys have heard me define, a scalp or something more like a really nice narrative trade. We'll throw in a third variable with let's call short-term conditions, right? And what I really mean by that is there blood in the streets? Is it, just wow, like look at this movement, look at this volume, look at this VIX, stuff like that. So those are the three factors. And then you might guess if it's a scalp, I'm going to scale a little more, a little sooner. Because it's a scalp. Why would I place more emphasis on something of a core position holding for more when I don't feel that I have strong wind in my sails from narrative? Doesn't make sense to me. So that's kind of the deal when I'm scalping. I might take half off, right? On kind of like first, second scale. I might take 3/4 off. Some scalps are so scalpy, I'm essentially all in, all out. More of my bread and butter narrative trades, I just keep NASDAQ up as we talk. I'm going to scalp a scale out less early, right? I might only take off 10%. I might take off a third, and leave more on for that core position. Why might I do that? Well, I feel I have the wind at my back, the wind in my sails, right? A tailwind. I have narrative that is potentially and probabilistically propelling this trade in it further than just intraday rotations and rhythm, which I still use to time the trade and to take an initial scale and stuff like that. This trade is bigger than those things, right? This trade has, my edge comes from the risk reward asymmetry of the narrative read. So I want to place more of my being right or wrong on that bet. So I scale out less based on short-term junk. If I'm scalping, I'm probably going to have order flow in my favor. I'm probably going to have, all kinds of things in my favor that I'm going to use those tools as a larger part of my bet as to what ends up making me right or wrong. I'm not going to lose money on a scalp that gives me a really good rotation or two in my favor, but some core position that I've held for that scalp move doesn't work out ultimately. I'm not going to lose money on that situation, right? I might end up losing money on a A+ narrative trade that I get into, and I get an initial scale and the rest of it is a full stop, right? I might take -1R on 67% of the trade, and I've only scaled 1.5R on a third of the trade, right? That's a net losing sequence. Hope that makes sense. It's all about the category of the trade and the conditions present. When things are really, really flying around, I forget the number because I don't do a good job of keeping up with like, this was my best thing ever or whatever. Some of you in the community, maybe you remember it. Maybe I tweeted it. I don't know. But I know that at some point during 2020, I didn't take a first scale until something nasty in the S&P. I forget if it was 50 handles, 80 handles, first scale, right? Those are special conditions for that to happen. It's only happened to me once, right? Like that. So, but when I see that and it just goes and I'm like finger on the hotkeys, I'm ready to take profits, and it's just boom, 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 boom. And why should I take profits? At least scare me out of a scale out, right? And in fact, a lot of times that's how I handle scales. I'm like, okay, we're late in a rotation. Let's be ready to take some profits here. You guys have seen me do that this week, right? Multiple times. We go in. I'm not just limiting out a lot of times. I'm saying, okay, it's a good time to scale. Remember earlier today, I'm looking for that capitulation, or I'm looking for the buyers to start to pull it back up, and a scale, right? So question, you have just said that you have a stop loss NQ high of day. Was that your first placement for it, or did you move the stop after a few scale outs to leave the trade some breath, the Spaniard says, but he means breathing room. It's still my emergency stop. it's still my emergency stop. So my initial stop would have been somewhere right here. Okay. My stop is somewhere, further up here. Just for privacy purposes, I'm not going to say exactly where my stop is, because who knows how powerful some of you are going to come run my stop. No. So I would have gotten in at the momentum shift here, and I would have been wrong if that momentum shift, especially given the diciness of the ETH being imbalanced up and providing support there, I would have been absolutely out of that trade just beyond that swing high. But once I got scaled and whatnot, so I guess to answer your question here is the stop was initially here, right? My mental stop was there and my hard stop was there. And then I deleted or moved the mental stop higher to kind of where my hard stop is. And I've left it there since. That's what I've done. I am by no means, I'm laughing with you. In fact, I go to Spain a good bit, or used to. And oh my goodness, I say things, like if I need to say if it's raining, right? I'll be like, el agua en el aire, right? I'll be like, there's water in the air. I that's how I speak Spanish. I know that rain is lluvia now, but like, I constantly have people rolling in the floor, like, Spaniards laughing at me speaking Spanish. They love it. So I'm laughing with you. I'm not making fun of you by any means. I love it. Do you have traders on your desk trading part-time? What do you think of prop trading while having another career? I think go for it, because, for some people, whether it's a financial thing or whatever, that day's never going to come until you start crushing it, part-time trading or whatever. So yes, I have desk traders who have other jobs, right? I have desk traders who work at prominent, accounting firms, all kinds of stuff. So most of them are full-time traders. Some of them have other jobs, work from home, more flexibility. A lot of people can do their jobs perfectly well and put on a few trades throughout the day and kind of balance that. So I think it's absolutely fine. And for many, many people, it's the only path forward, right? I don't know whether engineers or doctors have a harder time. Probably engineers, because engineers tend to overthink. Doctors tend to have more of that think on your feet skill, while engineers tend to think deeper and slower, right? So I guess I do have an answer for the question. So NASDAQ putting in a down rotation for us. Again, the question is, can we break this imbalance down ETH, this imbalance up ETH, and go rotational? Can we break back below the CVA? So right now there's a little, what's going on in NASDAQ is that there's a little battle, right? There's a battle between the rotational RTH and the imbalanced up ETH. There's a balance between the bearish upper extreme for the week and the bullish upper edge of the composite value high. And that is why you see the market put in 1, 2, 3, 4, 5, 6 rotations now on a 3-minute chart, ping-ponging in between those levels. On social media, you mentioned you were having a rough time trading. I think it was last October. Could be wrong about it. You mentioned you weren't doing your processes at the time. When you have slumps, is it usually a lack of processes or doing reviews? Yeah, when I have slumps, it's usually I get frustrated with an early part of the slump. Things aren't coming easy. I start to have some strings of losses. I start thinking I can sit down in the afternoon and that I'm a good enough trader to just go make some money. And my motivations, I feel, start shifting towards getting back P&L as opposed to just sitting down to take one more good trade and execute well according to my plan and focus on my process goals for the session, right? My motivations start being, let me get back to all-time highs with my equity curve. Let me make back this money that I lost in the morning session, right? And then all of a sudden, the reasons you're taking trades are not the same, right? You're doing things like the way I'm talking to you guys and saying, hey, here's the variables, here's the factors, here's the market generated information, here's my read, here's where I'm compromising on something. That's all out the window. And I just start compromising everything. And I could care less about almost anything other than like, give me immediate momentum on a low time frame. That's what I start trading like. Oh, you're not going down? I'll reverse my position. Let's go up, right? That's me tilt trading poorly. And I'll have a session or two where I do that. And now I'm in a worse hole. And then maybe the pressure of entering a drawdown might get to my psyche. And then I don't see things clearly objectively. I start trying to force things, or I get gun shy and start to hesitate on things. And then I end up chasing things because I hesitated on things. You guys know the drill, right? So yes, the short answer is yes, I do get away. I don't really get away from reviews. I don't really get away from, well, no, that's not true. Sometimes I get away from doing as good a reviews as I should. And as you can imagine, that's after sustained periods of profitability, right? Where you kind of, I don't need to do that, right? But the main thing that I get away from is motivations around trading well, being focused on defining winning that session around a process goal, something that's within my control. And I start focusing, my trading becomes about money. And that is where I trade my worst every time. And I used to get into cycles of just trying harder. Let me risk more and make it back quicker, right? That risk-seeking, egotistical, natural side of me. And so that's been a big deal, is learning to take my foot off the gas. You know, I'll go to sim if I have to, right? If it gets bad enough to where I can't trust myself, I'll go to sim and make myself like I'm in the tryout. Prove you can do this again. You SOB, right? Show me. Show me, don't tell me. Do you place any emphasis on the initial balance high and low and the statistics around them? No, you know, I put the initial balance. I almost don't even see it. Like right now, I have no idea that there's initial balance on the chart, but it is on the chart. So I do have it. I just used the first half hour. So it is there. And I'm probably being a bad example by saying there's something on my charts that I don't have a job description for. But the main thing I use it as is just like one more shorter term value area, right? So when we're coming back into this area where I was scaling out of this short, I'll be honest, I didn't even notice it at the time. So that's how little I lean on this, but this is a breakout pullback of the initial balance, right? If we were to fail back inside the initial balance, maybe we look at the other side of the initial balance. I treat it just like a very low use, very low importance value area, because it's a horrible measure of a value area. But a lot of people look at these opening ranges, initial balances, and whatnot. So Bitcoin for Nadro works. It absolutely works, as you're probably looking at and realizing there yourself. It works no matter what data set you get and can put in there. I've never seen anything that doesn't work. Is there a reason you have a separate DMI chart instead of placing those levels on your trading charts? For years and years and years and years, I copied all those drawings and my CVA levels and everything onto my ETH chart. That's exactly what I did, Maria. I only recently have I gotten away with that, away from that. I like how clean I was able to get my ETH chart. It used to feel a little bit cluttered, but it served a very good purpose for me for a long time. And that was that CWPW, connect with the prep work. I'm staring at an ETH chart, focusing on order flow and DVA. And guess what? My prep levels and bull lines in the sand and bear lines in the sand are also staring me in the face. I think for you guys, that's the only way to go. And I recommend doing that in the course. And that's how we start to set up our charts. I teach you to map over your CVA levels to an ETH DVA chart. So that's how I recommend you do it. I started doing the DMI chart, and it morphed into like a way to use like execution and to have a clean chart that I glance at a lot. Whenever you guys probably look at my eye and my head, like whenever I'm doing this, I'm looking at DMI charts, I'm looking at execution, right? Whenever I'm doing this, I'm looking at what you're talking to me about. Whenever I'm doing this, I'm looking at the screen, the monitor that I'm sharing with you. When your job schedule doesn't allow you to trade at all and you really, really want to be a professional trader, any advice to achieve that? No. I mean, you got to put food on the table. You got, unless you're financially independently wealthy kind of deal, then you wouldn't be, we wouldn't have this conversation. So there's nothing you can do other than adapt your trading. So if your, job doesn't allow you to trade, you're not working from home, like having all this, freedom and flexibility to do that. Let's say you're working a physical job outside. There's no way you could do it, right? You've got to find a way to do that. So you're either going to scalp for a couple hours before work or after work, or really late at night. You might be trading the Hang Seng, right? You might be trading a market that works for your hours that allows you to do that. And you need to scalp because you've only got a couple hours. You can't sit around and wait on the ideal intraday Nadro trades. So focus on order flow, focus on DVA, focus on yesterday's value, focus on momentum and price action and patterns, and just scalp. Or you go the opposite way. You swing trade. You spend a couple hours in the morning or the evening adjusting positions, stalking new ideas, placing a lot of limit orders and OCO brackets to manage stuff while you're unable to monitor it. That's the one of two ways that you go. All right, guys. Got to step away. Good Q&A here. I know we didn't get to a couple questions there. Bring them to me tomorrow. We'll get to them. We'll see you guys in a couple hours after the close. We'll keep monitoring this NQ position. It's trying to kind of get below ETH here. So we'll see. See you all in a bit.